Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
They essentially had those same dynamics in-house. They had the really big money engineering team, and they had a lot of issues on the payment operations side. And while there have been a lot of innovation on called the credit card side of the house, how do you collect payments from consumers? There hadn't really been that much around just moving money through the banking system, through payment rails like ACH or wires or even checks. And so this was the gap that we saw that led us to think there's an opportunity here to really build software that can help these companies.
That was Matt Marcus, the co-founder and chief product officer of Modern Treasury, and he is our special guest this week. This is episode 93 of the Leaders in Payments podcast, and I'm your host, Greg Myers. And hey, before we get started, if you happen to office in Houston, Austin, or North Texas, check out Fuse Workspace, where their mission is to help others do more. Check them out at fuseworkspace.com. Okay, back to the show. Matt was born in South Florida, moved to New Hampshire and attended Dartmouth College, and now lives in San Francisco. Modern Treasury was formed when the three founders were responsible for the payment operations systems at LendingHome, where they realized that there was a need for a more robust, scalable solution that helps move money. In 2018, the founders completed Y Combinator and had their first customer in the fall of 2018. Matt and I had a great discussion around today's real-time payment solutions and what they will look like in the future. We've got a great episode today, so let's get started. Hi, Matt. Thank you for being here, and welcome to the Leaders in Payments podcast.
Thanks for having me here.
Absolutely. So let's dive right in. Tell our audience a little bit about yourself, maybe where you grew up, where you went to school, where you currently live, a few things like that.
Yeah, so I'm from South Florida, very hot state, and I lived there before Miami got cool, although I don't really plan to go back. After growing up there, I retreated up to New Hampshire, which was about as cold of a state you could go to. So I went to school at Dartmouth, and I came in thinking I'd study economics like a lot of people, but I really enjoyed computer science in my first term at school and really fell in love with programming and solving problems in that way. So I ended up majoring in computer science and becoming a software engineer. So spent a lot of time writing code, building stuff around campus, things like that.
Okay. And now you're in San Francisco?
Yeah, that's right. So after school, I moved out to San Francisco. I actually interned out in San Francisco a few times. So got good experience here, and it really felt like this was the place to be for anyone interested in working in tech. And I enjoyed the city quite a bit. Quite a few of my friends moved out here after school too. So I've been living out here since 2016.
Okay. So you went from South Florida to New Hampshire to San Francisco. I mean, you've covered all the corners of the country.
Yeah, it's quite a bit. My parents remind me that they lived out in Palo Alto right before I was born, though. So they said that I came full circle back over here. But I think everyone early on in their career, or not everyone, but a lot of people end up spending time out in San Francisco or the Bay Area.
Sure. Well, let's talk about the company, Modern Treasury. Tell us the founding story, sort of give us the background on how it got started and what you guys are doing today.
Yeah, so after school, I went to work at a company called LendingHome. LendingHome is an online mortgage lender. They specialize in residential fix and flip loans. So if you're trying to buy a property and you want to fix it up and sell it for a profit a year later, they give you a loan for that purpose. And then they also sell those loans on the back end to investors, whether they're hedge funds or retail investors, and kind of a whole range of options. I worked there for 3 years, and I met my two co-founders, Dimitri Dadiamov and Sam Aarons there. We all actually started on the same day. We started in 2015. I was interning, and they both started full-time. And they were both working on the investor side of the platform, specifically for retail investors. And we saw there were a lot of problems that LendingHome was facing, a very operationally intensive business in a really large market, mortgages. But specifically, one of the problem areas we really observed was around money movement. LendingHome was funding mortgages. They were collecting repayments. They were selling these loans to investors, handling a really high volume, billions of dollars of loans by the time we left. That's a lot of transactions happening and flowing through the system. And there are basically two things that LendingHome did. They had a money engineering team, so a team responsible for moving money at scale. And this team interfaced with our banking partners, built out systems there. This was, continually staffed and an ongoing effort. And then the other side was on the payment operations and treasury side of LendingHome, the team responsible for telling customers where their money is, troubleshooting issues, closing the books, making sure we have enough cash to fund daily operations. They were basically still working out of spreadsheets or paper. And we honestly didn't really have the time to help them out to the degree we could. And when we looked around at what were other companies that came of age in the 2010s that were tackling these really big markets and things like real estate or healthcare or ride sharing or a lot of these online marketplaces, they essentially had those same dynamics in-house. They had the really big money engineering team and they had a lot of issues on the payment operations side. And while there have been a lot of innovation on called the credit card side of the house, how do you collect payments from consumers? There hadn't really been that much around just moving money through the banking system through payment rails like ACH or wires or even checks. And so this was the gap that we saw that led us to think there's an opportunity here to really build software that can help these companies. So after talking with a lot of them towards the end of our time at LendingHome, we decided we wanted to start Modern Treasury. And so we applied for YC at the beginning of 2018 and ended up getting in and starting the company in the summer of 2018. And really the problem that we set out to solve then is still the one we're working on today, which is how do you help companies whose product moves money in one form or another do that? And the approach we took was to build software. So we were building out this payment operations software platform geared towards companies like that. And the key thing about what we do is that it is just software. We actually are not in the payment flow at all. We don't actually touch money through our own bank accounts. Instead, we work with our customers' banks and help them move money, manage their bank accounts, things like that. Because what we observed and what we saw at LendingHome and other companies was these really big companies, these really complex businesses, they can't have someone else sit in the funds flow for them. They actually need to work directly with a banking partner, with someone like a Wells Fargo or a Silicon Valley Bank or JP Morgan Chase, and own the funds flows themselves, whether that's for timing issues, cost issues, regulatory issues, runs a spectrum, but it fundamentally is required for them. So that's how we think about ourselves and kind of the core thing that makes our platform different.
Okay. And who are your core customers?
Yeah, we work with companies that are embedded finance companies, so companies that actually offer APIs themselves and help people build their own products, whether they're banking as a service companies or things like stock trading or payroll. And then we just work with a really wide spectrum of fintech companies that are building products in real estate or in healthcare or in payroll or in invoice factoring or in income sharing agreements or kind of anything that moves money. And when we think about the economy and really these large sectors of the economy, they primarily operate over banking rails, over rails like ACH and wire. So those are the types of companies that we look at. We're not really focused on more traditional, call it accounts receivable or accounts payable use cases. We really think about programmatic money movement, complicated money flows, high velocity, things like that.
Okay. So does it matter who your customers bank with? Do you have to have a relationship with the bank as well?
Yeah, so it does matter. You can think about us a little bit like a marketplace where we're working with companies and helping them connect to their bank. And so today we work with over a dozen banks as partners, banks like Silicon Valley Bank, where we built a technical integration to their systems, whether their systems operate over SFTP or via API. It sort of doesn't matter to us. We just interface into them on behalf of our customers. And then we connect into our customers' bank accounts on their behalf. That might sound kind of like a scary problem. There are a lot of banks out there, but it's actually a fairly tractable problem. It will take time, and it's something that we are continually working on. But there are fewer banks that serve the type of corporate customers that we're going after. And so we focused on a lot of the pretty obvious ones like Silicon Valley Bank up front and establishing those partnerships with them. And, we see in other countries too, some other countries have fewer banks than we have here in the US. And so we support banks like Royal Bank of Canada over in Canada, and we're adding other banks overseas. And some banks like JP Morgan also can support customers overseas. So yeah, the banking side is something that's a continual effort. We spend a lot of time there.
Okay. And the product is live today?
Yeah, so the product's been live since the end of 2018. So we went live with our first customer, Sana Benefits, in October of 2018, and they're a healthcare insurance company. And, really, we've seen pretty rapid growth on it. We shared recently that, we're doing $2 billion of reconciled volume a month across the platform. So that's thinking about payments that we're initiating as well as payments that we're helping to reconcile that are coming into your bank account. And, that's just really driven off of customers that have built their businesses on us and grown really rapidly in these large markets.
Okay. And is it priced as sort of a SaaS model or a licensing fee? How's the pricing?
Yeah. So we price across a few different components, and some are maybe less intuitive and others not. So we charge SaaS pricing, so access to the platform. We charge transactionally, both in terms of percent of volume, as well as the number of transactions that flow through the system. Because we think that's where a lot of the value comes from, is the payments that are flowing through our system. And importantly, that transactional volume that we price on, it includes some of the products we built around payment reconciliation, because one of the things we saw was for a lot of companies, their problem isn't just payment initiation. It's also flows where if you're an escrow business, for example, you need someone to send you a wire transfer. And when that wire hits your bank account, you need to know about it. You need to know when does it come in, who sent it to you, things like that. And in the absence of automation, you have humans who do that. And so we built products around automatic reconciliation and attribution for inbound payments. And so we charge in the same way for those as we do for payments that you initiate. We don't charge for things like user seats on our platform. So when you look at a lot of treasury management systems or ERPs, they do charge based on the number of seats and users. But we believe that our platform is a lot more valuable if there are more people in the company who can use it. So we really try to build out software to get as many people inside the company in there so that they can answer their questions and run their business as well. And then we charge more tied to how the business is doing and helping them to grow.
Okay. And then how do you go to market? Do you have a sales team? Do you work through partnerships? How do you go to market?
Yeah, that's a great question. So for the first few years of the company, everything was inbound for us through a few different channels. Obviously, some word of mouth, some being in YC and having the launch around that, and just the community and happy customers. We also work really closely with our banking partners. And so it's a really symbiotic relationship. We help their customers and we work with the banks. And so, we see a lot of channel referrals through our banking partners. We've recently built out a sales team. So now we have folks who are spending time, really dedicated to sales, starting to do some outbound there. One piece, I guess, on the inbound side that I mentioned as well is we have great content. So actually the first person that joined the team was Rachel Pike, and she's our chief growth officer. And her focus from the beginning was really around building out our brand, our content, our marketing strategy. And we've invested a lot in those pieces, and it really has paid off in terms of companies knowing who we are, trusting us as a really competent player to help businesses grow. And we have a great blog, the Modern Treasury Journal, and our journal entries on there, which is kind of an accounting joke.
Yeah,
and
I saw that.
Yeah. And so, we publish things that are both, change logs. So we want to keep people updated, like what are we shipping? But we also put stuff on there, we call them payments primers. So things that we think will be useful. Like today, we published a piece about why are wire transfers so expensive? And that's something that people don't really understand. We also have bits on there like our reading list that we give to new employees for understanding payments, or how does ACH work? And, payments is really complicated. And so we want to help people understand that. And also, it drives more traffic into our system. And we have some fun pieces, like we were the number one post on Hacker News a few years ago for a post entitled, "What Happens When You ACH a Dead Person?" That's a good read. But yeah, things like that help.
That's cool. Well, what would you say differentiates your company from your competitors out there?
Yeah, that's a great question. I think there are two things that I'd boil it down to. One is that we are software. We're not a payments company in the traditional sense. So we really focus on helping our customers get access to the best banking rails, financial rails to grow their businesses on. And because we're just a software company and not in the funds flow, we can really spend time investing in the software that our customers use, the workflow, the things that help them do their day-to-day jobs. If you think about another company that publicly says that they do this as well, there's Ramp, who's a corporate card, and they built out great software to help teams run their businesses too. And I think you're seeing a lot more companies that do that. And then the second thing that I think really differentiates us is the team and our focus and where we're coming from. We're coming from the side of building companies like LendingHome, which are, really next generation fintech platforms tackling massive markets. And all these problems that we're working on, we approach them from really our experience and our point of view working in companies like that. And we've grown out the team, hiring folks from places like Affirm and Flexport, a lot of these other great companies that were built over the last 10 years. And I think we're really approaching from that angle and thinking about what do these great companies need. And so, there's a lot of other stuff in terms of what we're building and particular strategies. But I think the team and our approach of being a software company are really what differentiates us.
Okay. And where do you see payments? And certainly you can answer it from the perspective of your company and what you do, but where do you see the industry headed, say, in the next 2 to 3 years?
Yeah, I think it's interesting to think about the next 2 to 3 years as well as longer term. I think in the next 2 or 3 years, we'll see a few things. One is that there are new real-time payment rails that are coming to the US. Two in particular are the RTP, the real-time payment rail that the clearinghouse created, which is out and it works. And if you go to PayPal now, you can get funds via RTP. So, this is basically 24/7, 365 transfers that go directly from one bank account to another, and they're instant. And that's really revolutionary because payments have been typically a batch-based process and failures happen asynchronously, so they happen later and you need to monitor for them. So RTP is really great from that point of view. And there's also the Fed Now system, which the Fed is building. And that won't really be out in the next 2 to 3 years, but it'll be interesting to see how people adopt that. So I think we'll see a lot more companies begin to play around with RTP and discover these use cases and start to build mind share amongst consumers and get people familiar with what it's like to get a real-time payment. So that's one thing. I think another thing we'll see is just a lot more innovation happening in the banking space. There are a lot of companies that are approaching different problems in pretty different and unique ways. So there are a lot of banking as a service companies that are working more closely with smaller banks and credit unions to help them offer financial products to corporates or help corporates build financial products. I think we'll continue to see that as smaller banks, look for ways to innovate and basically generate more revenue. So there are a lot more companies there that we'll see. So those are the main things I think we'll see over the next few years, in addition to just a lot more fintech companies and companies that are tackling these pretty large markets I mentioned before.
Mm-hmm. So do you run into challenges with these larger banks and their legacy technology systems that they have? Is that an issue for you guys?
That's a great question. So we don't. I think part of that is because we become experts in working with those systems. So there's SFTP, which is a protocol-like technology that was built a long time ago. There are these flat files that you can upload to them. And I know these might be fairly technical, but if we think about API-based companies, these are the grandparents of them. And they look really scary to a lot of people, rightly so, because they work in weird ways that you're not accustomed to, especially if you've started writing code in the last 10 or 20 years. So, we've really become experts in building against these, so we're quite comfortable with it. And we actually enjoy working with them to some degree because we know that since they've been around for so long that they're very stable versus some newer systems that banks might be rolling out that have been around for less time. And some are great out of the gate, but all software can have bugs. And so it's less likely that something that's been around for a long time has a bad bug. So I think when we think about new capabilities, things like RTP, you see those being developed in API first ways. And I think that is a good thing, especially since these new payment rails will be synchronous. They will be real time versus things like ACH, which the bank can build an API for ACH, but at the end of the day, it's asynchronous, it's batch based. So you're not going to see it complete until the next day, regardless.
So do you think things like the RTP and the Fed Now, will that affect the smaller banks and credit unions more so than the larger banks, or is there really a difference?
I think that we'll see a few things here. Currently, at least, RTP mostly has adoption amongst larger banks. And some of the smaller banks and credit unions are waiting for Fed Now to be rolled out to sort of get on this new payment rail. And so I think we'll end up having different real-time payment rails in the US, which isn't necessarily a bad thing. It's more competition. And as long as there's good interfaces into them, it sort of doesn't matter to the end consumer or business. I think one challenge that will come up will be in how these technologies work in the user interface for them. So when we think about both these real-time payment rail, it has a mechanism called request for payment, where you can actually send a message to someone else and say, I want you to send me $10, for example, for this. And then they can accept or reject that request, kind of like what you do with Venmo. And so it's an interesting paradigm shift because today you need to pull funds from someone, like you do an ACH debit, let's say. But in this, you request that they push funds to you. And that's a new user interaction that every banking portal will need to build into it. And the banking course will probably help with that. But there will probably be this called payment rail support before the user interfaces get there. And I expect that the larger banks or maybe some of the neobanks will support that first, and that'll put pressure on the smaller banks to get there. So there probably will be a good opportunity to help with modernizing these banking interfaces there. But I think overall, one thing it'll also stress is just called bank liquidity requirements and how they think about funds movements in a real-time world versus today where funds settle and move on business days during working hours as opposed to 11 p.m. on Saturday. It's hard to know exactly how that will stress different banks, but my guess is that'll hit ones with less technology resources harder.
Yeah, that makes sense. Well, let's switch gears a little bit and talk about you. So tell us about your journey as the co-founder and the chief product officer. So you mentioned the YC, I'm going to get this wrong, the YC, is that right? YC?
Yeah, YC, yeah, Y Combinator.
Yeah, that you guys were a part of. Maybe talk about that a little and then sort of, what it was like getting in there and then coming out of it, and maybe a little bit about that entire journey would be cool.
Yeah, absolutely. So, doing YC was a really great experience for me, Sam, and Dimitri. We got put in this environment with a lot of people who were, new founders, just started their companies, some who have been working on them for a while. And it really is this environment, I don't want to say pressure cooker, but, it does encourage you to work harder and faster to build out your company. And they, YC, they have great workshops on things like how to do sales and how to fundraise and pieces like that. But really, I think the two things that YC pushes founders to do is write code and to talk to your users. And so, for me personally, that was what I spent almost all my time on, was writing code and talking to users. And the same thing for Sam. And then Dimitri, he doesn't write code, but talking to the users and fundraising when the time came for it. And so that was really actually the first year and a half of the company was just writing code and talking to users. I mentioned Rachel earlier, but we didn't hire anyone after her for another half a year. So we didn't have any other engineers on the team for a year after we started the company. So Sam and I were just writing code. And it was really good for getting really fast feedback and building out the system and proving that it worked. And, over time, as we hired more people, as the engineering team grew, as we hired in other roles, customer success managers, people like that. Personally, I've really stopped writing code as of 6 to 12 months ago is kind of when that break off happened. And I mostly spend my time talking to users now, both in the context of current customers and just understanding their problems and pieces like that. Also doing sales and talking with prospective customers, and then, running our product team. So we have a small product team of product managers and designers and helping them with roadmap planning and feedback on things that they're working on, and also doing code review for the engineers. But I think the thing that doesn't change, that won't really ever change, is just really staying close to our users or people we want to be users. And that's something I enjoy spending time on quite a bit. So that's how things have evolved for me as CPO at the company.
Okay. And I always like to ask this question when there's multiple founders in a company. So you have two co-founders. Yeah. What is the dynamic like having three people as founders? Just there's always interesting stories. So curious how the dynamics are there.
Yeah. So I think one thing that worked really well for us is that we all knew each other and had worked together before. And so we had sort of already tested the working relationship as well as the personal relationship. And, when we went into starting the company, we actually did an exercise that someone recommended to us where we made a spreadsheet and we had ourselves as columns and we had rows with areas of responsibility like front-end engineering, fundraising, stuff like that. And we just wrote out who's responsible for these different pieces and then who's sort of the reviewer. And I think doing that really helped to delineate responsibilities early on, helped us to move quickly. We knew we didn't have to ask because there were only two people on every topic.
Right.
But I think a higher level, the three of us share values. I think fundamentally we respect and value the same things. And so even though there might be individual decisions that we differ on, we all have the same long-term ambition around building independent company, building it the right way and pieces like that. So, just having that deep respect for one another helps us out, or even if there are little things that we don't agree on, it doesn't really matter in the grand scheme of things.
Right. Well, what is something that you're passionate about? It could be a work-related thing or a personal thing, but something you have passion for.
Yeah, I think for me, and Modern Treasury has really helped me to do this. It's just about learning about business and the way different businesses are run. I used to enjoy reading business books and books about different businesses, and that can be helpful to get a glimpse into things. But at Modern Treasury, we help people build their companies, and we see the company at its most fundamental level. How does money move? And if you think about sort of being a student of business and understanding different sectors and how they work, you really get to learn that being at Modern Treasury. And so for me, it's just been absolutely fascinating to get to meet all these founders or executive teams or even the engineers working there and just learning about how their businesses work. And I think that's the type of thing that is probably a never-ending journey. There are always going to be new business models, and they're going to push what you think about things. And I'm really just interested in continuing to learn about that. And I think we built out a team that is similarly really curious about that. The team, pretty avid readers, and we share books quite often with one another. We actually even have a company perk around reading budgets. So the company has a lot of bookworms in it, but we're just a very curious crew to learn about how these businesses work.
Yeah. And one more question. So you're a good example, the company of some coming out of school and kind of knowing that they want to be in this fintech space. And I think that, when I started in payments 16 years ago, fintech didn't exist, at least the word didn't. And, people didn't go into payments. You just sort of fell into a career in payments. But I think it's different these days, right? There's so much money invested in fintechs and payments, and it's such a hot industry to be in. I think a lot of kids are coming out of school today really thinking about fintech as a career path, whether that's on the business side or the engineering side or design side. There's just so much sort of attention and activity around fintech. So what would your advice be to someone, say they're coming out of school and they're looking at a career in this space? What would you tell them that they should do to be successful?
That's a great question. I think it's important to understand that fintech is a really broad space, a really broad definition. There are a lot of different types of fintech businesses. There are businesses like us that are infrastructure and we sell software to other businesses. There are fintech companies that offer products directly to either consumers or to businesses. So you have businesses like Chime, which, they're building a neobank, and then you have businesses like Square, let's say, who are offering products to small businesses. And I think it's important to understand that distinction a little bit, to think about what problem spaces do you find interesting, like building for businesses or building for consumers and building software, building a direct service. So thinking about that up front a little bit, there's plenty of fintech in every space. So, if you're really interested in like small business lending, you can go do that. I think if you're thinking about starting something in the fintech space out of school, that question still matters about what space you're in. If you're interested in building software, kind of like what we've done at Modern Treasury, I think it's really helpful to work at another company before and to see their problems and to really understand what do they go through, what do they build themselves. So I think that's the best way to find problems that you can turn into a company. And then otherwise, going to work at a growth stage company, a company that has product market fit, is growing really quickly, has great people. And that's what I would optimize for, rather than going someplace that's much later stage that you might not find quite as much ownership in, and their problems are a bit more fleshed out. And going really early stage can work out in some cases, like joining a very small seed stage company. But I think joining something that has product market fit and is growing really quickly is probably the best place to go as a new grad.
Yeah, I think that's some good advice. Well, Matt, we've covered a lot of ground on both the company, Modern Treasury, and on you and the industry as a whole. Is there anything else you'd like to add before we wrap up?
No, I think this is a really interesting space. I think the only thing I'd add is that, we're hiring quite a bit at Modern Treasury, and our jobs are on our website across the board, engineering, customer success, sales. And I think we're a really fun place to work. So definitely reach out if you're interested in the space.
Okay. Well, Matt, thanks so much for being on the show today. I know your time's very valuable, so I really appreciate you being here.
Thank you. Yeah, I enjoyed it too.
And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.